Now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, it's party time. Welcome to Financial Fitness Friday. I'm Rich Rosso, CFP. Danny Ratliff, CFP. Thanks for being with us this morning. And thanks for the guy I named Swervy in front of me this morning, taking up all 3 lanes in his little Camry. Someone has been hitting the holiday eggnog really early. So here's to you, Swervy. You have to have more than 2 eyes on Houston roads. You got to have 2 eyes, 2, 4, 6, 8, at least 8 to drive around here.
Yeah, I can't disagree.
You should have seen this guy. It's like he owned the road. He's in the right lane, then he swerves over to the middle lane, then he's in the left lane, then he comes all the way back, and I'm just staying behind him, and I'm just watching him dance and trying to figure out how do I get past him. So, here's to you.
Sometimes you just may want to be behind those guys. I don't know.
Well, I had a speed. He was actually going at this steady cadence. So he was sort of like a little dance. He was like a little butterfly. He was floating from one lane to the other. So I managed to get between. As soon as he got over to the right, I past him. So, yep, one of those days.
I've seen you drive, so that's saying something.
Yeah, I'm telling you.
I'm going down the highway. I look over. There's Rich in the far right lane getting ready to exit. But no, he doesn't exit. He keeps going.
I keep going.
At a cruising at about, 55, 60?
Yeah, stay in the speed limit.
Yeah. So if you pass this guy, what I'm getting at, that is super impressive. He must have been going slower than what you're thinking.
He was going slow. Well, this morning I was driving like 70. So, because nobody on the road.
Did you have
Everybody's
coffee?
taking off. Huh?
How much coffee did you have?
I didn't have much coffee. Yeah. But again, I mean, roads were quiet, except for Swervy. So it's that time of year again. Oh. Well, first of all, hopefully we're into the seasonality of wonderful stock returns. That would be nice. We've seen, Danny, the 10-year yield drop precipitously. Ooh, said that pretty well today. Precipitously. Over the last week or so. That's been nice. I don't like this stock-bond correlation connect. This always bothers me. But hey, as long as people are getting returns. S&P open 11, implied open, Dow 105, NASDAQ close to 10. So we'll see if we can keep this up today. That would be nice.
I think the interesting thing about that is at what point do they uncorrelate? There's going to become a time if the yields continue to drop. I know we think this is great. We're in this Goldilocks period, but at some point, I think the market's going to take notice and they're going to say, hey, whoa, something else is going on out here.
I think so. I don't know what, but I'm afraid to think about what causes the disconnect. I mean, the kumbaya moments seem to be the most calm moments where everything is copacetic. Yields are falling, stock prices are rising. I also do think that the market is pricing in a rate cut way, did I say way? Too soon. I do not see this. I do not see this pivot so quickly. I may be the only one, me and Larry Summers, in a corner like little girls crying, that do not see a pivot.
I don't know. I'm listening. I listen to a lot of different news. I mean, we're listening to earnings calls. We're listening to different firms and what they're thinking and saying. Just trying to get a lot of different information. And from some of the big institutions right now, there's a couple that have actually come out and said, "Hey, it won't be as quick as what we expect."
I know, but it doesn't seem like the market's digesting that very well. Maybe it's just because the hiking has stopped. Although I am in the camp that we have one more hike. Labor markets are stubborn. I'm reading a new book about transfer payments and how much of a percentage of income that is of the United States. We rival France, by the way, in transfer payments.
Explain what that is to most people.
Well, government handout,
correct.
Right? It could be, Social Security, it could be whatever it is, but it's just the amount of benefit that's available to families today in the form of social safety nets. And again, some people need them. I'm all for it. But again, you look at the percentage of the population on these social safety nets versus people working and paying taxes, and I cannot believe they ranked in this book where we stand in the United States versus Europe, and I was shocked to see where we are. France is a shade higher than we are as far as the amount of benefit that is provided. So that tells me, with all the cash in the system from the stimulus programs, the infrastructure program, there's still a lot of cash. People are still spending. The labor market's stubborn. So I am in this camp where rates are higher for longer on the short end. And unless something, why is the Fed going to cut rates unless there's a reason to do it? Like, in other words, I'm hearing things like, Danny, like, they're going to cut rates because the economy is slowing. Why would I cut rates if the economy is slowing? Why wouldn't I look at certain metrics? I mean, I understand this Fed's quick on the trigger for stuff like this because they want to try to avoid business cycle and recession. But I don't know. I just don't see March, April as the time for this to happen.
I don't know. I've been trying to think a lot about this, especially after yesterday with Walmart. Walmart comes out, beats earnings expectations, actually increases their forward guidance for next year.
Yes.
But their guidance in the sense of what the retailer, they said the last 2 to 3 weeks of October, they started to notice a weakening in the retailer. And their thought was, their CFO comes out and says, hey, we may see deflation. Mm-hmm. We haven't seen deflation. And, we get these numbers and we get a lot of calls. People say, well, listen, I know we were at 9 and we're at 3. I'm still going to the grocery store and things are still very expensive. Nothing is coming down in price because we're still seeing growth in inflation and prices,
yes,
right? But it's not as quick.
Correct.
Deflation, though, I thought that was a pretty quick to use that word right now.
Yeah, I agree.
So I'm wondering what they're really seeing underneath the surface. And if we're going to see deflation, what are companies more prone to do? We've had this stubborn job market,
right?
Which is great. We don't want to see people out of work.
No, absolutely not. It's been great that people have jobs.
But do you think companies are going to be more inclined to cut prices or people?
Oh, absolutely, people. And, I guess from Walmart's perspective, by the way, we did start a position in Walmart yesterday in the weakness because we think it was overdone.
Which most people do, by the way, I think.
Yeah, absolutely.
From what I've been hearing.
But keep this in mind. Deflation from a Walmart perspective is, think about the goods. Understand they have a pretty robust grocery section. And to your point, I do not see prices on the things we use every day. What we need to do to keep a roof over our heads, insure those roofs, I don't think that's going to change. What is going to change is the crap that Walmart sells for the most part. I mean, there is deflation because of supply chain that's been fixed to some degree of goods, of discretionary goods people buy, right? Televisions, stuff like that you can't eat, put on your table. I mean, I could see deflation in clothing prices, those kinds of things. I just can't see it in the stuff that you need to survive every day.
I don't know, Rich. I mean, I'm spending a little more amount of money.
Yeah.
Eating the same stuff, and I'm losing weight.
That's a country song somewhere.
I'm kidding, but everything is getting smaller.
It is. Everything is getting smaller. The cream in the Oreo is not what it was. Just ask Lance Roberts. Hey, the Butterball Turkey Talk Line. We're going to talk a little bit about it when we get back. Gobble, gobble. We're back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So the Butterball Turkey Talk Line has been around since 1981. And since 1981, Rich Rosso has been prank calling them because I was the king of prank calls when I was a kid. And I just continue that today. The hotline received in the first year 11,000 calls, 6 operators. So there's a list of some of the craziest questions, the zaniest customer questions. I'm proud to say there are 2 of them that are mine on this list.
So why don't you tell us what they are, and we'll guess which ones are yours.
Well, there are a lot of them,
know.
but I've got 2 new ones for this year that I'm calling with. You want to hear my new ones?
I want to hear the old ones first.
Okay. Can I base my turkey with suntan lotion? That's one of mine.
They must be in Texas.
Now, here's some funny ones. How do I roast my turkey so it gets golden brown tan lines in the shape of a turkey bikini? Why does my turkey have no breast meat? That sounds like something Mai would say. This was one of mine. The family dog is inside the turkey and can't get out. What do I do? My collie's got his head stuck in the turkey and I can't get it out. Ma'am, we'll try to help you as best we can. So this year, I've got 2. Well, here's a few others. Can I slow roast a turkey for 3 or 4 days? I don't want to touch the giblets. Can I fish them out with a coat hanger? The turkey in my freezer is 23 years old. Is it safe to eat? Oh, my goodness. I can't even imagine.
I can't imagine what the people on the other end of the line think. They're like, I'm getting paid.
Well,
to
every
do
year I
this?
post on Facebook my list, my greatest list, but I've got 2 for this year. The first question is, Miss Turkey? That's what I call them, Miss Turkey, when I call. Yeah. Is white meat or dark meat worse for the planet and the climate? Can you tell me? That's my first one this year. My second one this year is, my turkey seems to identify with a pot roast. Do I need to cook it any different? So those are my 2 for this year.
So when you make these phone calls each year, do they laugh? Do they try to answer you
take
seriously?
it seriously? Yeah.
Is there a live person or is it recorded?
No, it's live people, men and women. I'm like a tradition.
They're looking for your call.
Oh, they've got him on caller ID. You know, like, all right, who's going to pick up this one?
I don't even care. It's just, again, they get 100,000 questions. They got 50 experts now through November and December.
They don't pay those people enough.
They do not pay them enough, especially when I call.
How many experts?
50? Yeah. That's quite a phone bank.
What is the training involved to be a turkey?
This is a
turkey
this is a
expert?
Danny because he's manly man. This is Danny's question. I carved my turkey with a chainsaw. Is the chain grease going to adversely affect my turkey?
No.
I thawed my turkey out in front of the Stephen Colbert show, and now it smells bad, and it seems to be crying. Well, that's
kind of disgusting.
Oh, man. The turkey in the freezer for 23 years. I'm thinking that's not good. I'm thinking that's not good. Yeah, the family dog's head stuck inside the turkey is really one of my finest ones.
Hey, so we talked a lot about spending.
Yeah.
You were here in
And turkeys.
the spending season, right? MasterCard just
absolutely.
released a lot of data. It looks like
What'd they say?
year over year, everything's up except for furniture spending.
People are spending money.
Yeah, restaurants like 8% up.
I'm telling you, Danny, like we said, some switch in people's heads. No money in emergency savings. $1 trillion on credit cards. And it's some sort of apocalyptic spending. Like, no matter what. And I think it's because people have jobs. I also will give you a theory which has no basis in any kind of economics. Look at the Consumer Sentiment Index. I think people spend when they're feeling good, but I also think people spend a lot when they feel bad. And these sentiment indexes do not look like people are very happy. So I think we medicate with spending. And I don't know.
Used to window shop, and now people just shop.
Well, just break a window and take the stuff now. But I'm just trying to figure out what happens. You know, this is a slow-moving train that's headed for a wreck, like Swervy on the road today. I don't know how long consumers can keep this up. And to your point earlier, sooner or later, you're going to get to the point where unemployment rate goes up.
You would think if Walmart truly thinks you're going to see deflation,
Yeah.
I would think that you're going to have to see something
and listen,
else come with it.
they're so pervasive. I think I shared this story a while back, but I was shocked when I walked into Walmart because I had this image of Walmart. When I walked into Walmart and saw how well stocked it was with goods that they usually would not carry, sort of a bit higher end, brighter, cleaner, I was really surprised. It was not the Walmart that's in my mind that I recall. So the CEO has done a really great job. And they've also picked up the e-commerce quite a bit. So they've been aggressive on e-commerce, and they're doing a great job.
Maybe
But
this is a new marketing scheme to get more people in. They used to have, falling prices, and now instead they've, hey, it's literal falling prices. Come check it out.
I don't think most people understand what deflation is.
Well, but I also, you look at what they've been mentioning, which over the last year, they said, listen, the demographic of high-income earners has increased substantially of people who did not step foot in Walmart previously are doing so now.
Absolutely. Well, so I do the parking lot indicator, right? I'm looking at the parking lot and looking at the cars in the parking lot. And yeah, there's some, older models, but there are a lot of higher end automobiles of people shopping. Well, didn't they come out with a study not too long ago that people making, $100,000 or more?
Yep.
We're shopping at Walmart now.
Correct. But I always find the car indicator difficult because I see you go through some neighborhoods that are.
I know, it's just the neighborhood maybe too.
But you go through some neighborhoods that, homes are okay, they're nice, but, and they've got a $100,000 car in the driveway or two of them. And then you go into some of the really nicer neighborhoods. They may have some nice cars, but a lot of these people are driving, cars they've had for 10 years, right?
Yeah.
They're looking at things a little bit differently, and priorities may be different. So that indicator for me is always difficult.
Yeah. No, I agree. I agree. And again, I also think it's because of people were saying, well, because the economy is getting so bad that people that make six figures are shopping at Walmart. But I will also argue it's the work that's been done by the CEO to change that image. And I'll tell you, that's like turning the Titanic. I mean, he's done a great job.
Yeah.
They have done a great job changing the image of Walmart. I also like the fact that Walmart has stayed out of politics. Look at the returns, even with Walmart getting derailed and Target up the other day.
Man, what a difference, too.
Look at the year-to-date, look at the year-to-date returns or the one-year returns on Walmart versus Target. Sometimes it's best to just focus on your business. And I also love when I'm getting gaslit by the CEO of Target saying that, customers really appreciate everything being locked up. Mm-hmm. Which customer is enjoying the fact that I can't get to the stuff that I need without calling a representative? Yeah. I don't think, and
only
it doesn't.
Only the kleptomaniacs.
Well, I'll tell you what, we went to Home Depot after church the other day. Michelle drops me off. I run in, take one kid with me. And she's like, what is taking you so long? I'm like, I'm trying to find somebody who can, open up and give me this blower, right? Like, our blower died at the house.
Yeah.
And she's like, what do you mean? You can always find somebody at Home Depot. I'm like, well, evidently you can't except today.
Because they lock it up.
It is locked up.
And there's fewer people to help you.
But the Target CEO is telling you that that's actually a positive. So
well, maybe for them because they're decreasing the amount of theft they have.
He says it's a positive for customers.
Why?
I don't know. I got to read the story. But my assumption would be is that at least the goods are there. But again, it's a dumb comment, frankly. It's a dumb comment, and Target's price, even though it was up 17%, is way off its high. And I still think that they've got some major issues.
If you have the same item in a store, I can walk in and pick it up versus one I have to wait for somebody and search.
You're not thinking of the customer at all.
I'm not going there anymore.
Yeah.
I mean, you're going to lose me as a customer. Not that I buy this stuff every day, but when you do, I have a friend of mine in California who sent me a picture of a Target aisle. And it's walled off on two sides. You don't see any goods. It's just doors. Because everything is locked up. The whole aisle, no matter what you want to buy. So you need a personal shopper with you, basically.
Yeah.
Just to get anything, right?
Anything.
Walk around, unlock something.
How much is your time worth that you're going to do that? That has led to more money going to Walmart. Amazon. And frankly, more money going to Amazon.
Amazon's got to love it.
Amazon's got to love it. So that's the way it is. Well,
they're killing themselves.
Yeah, I'm heartbroken. So what you up for Thanksgiving there, Danny? You doing anything special?
Work.
He's gonna be working on his CRM and.
Well, he's going to be blowing the leaves off the driveway with his new blower.
That's right.
What leaves? Oh, what do they say in Texas? Even when the falling leaves are falling leaves, even just because they're dead from the heat, it's still.
Well, we had that too.
Yeah. Well, that's the problem is that all the leaves fell, 3 months ago. It was 110 for 10 weeks.
So we have all prices have been down, another 5% Thursday, off 20% off their highs. But I still think that you got some good buys in energy prices and more consolidation to come. We get back, we're going to talk about withdrawal rates, safe withdrawal rates. You're creating a retirement income paycheck. You've heard of the 4% rule, but let me tell you something. This safe retirement spending rate is all over the place. How can you figure it out? When we get back, stay tuned.
Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
The bets are on right now for the NVIDIA drinking game.
The Real Investment Show podcast.
Every time NVIDIA says the word AI, you have to take a shot.
Same show, your schedule.
By the time they get through the earnings call, half the country will be completely obliterated and it really won't matter what they say their earnings were, which will be just in time for the debates. Exactly.
At realinvestmentadvice.com.
That's all of the drinking game right there.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791, or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell report. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
I'm going to tell you where recency bias, where you think the conditions that exist today are going to exist forever, or really will hurt you. And that is when it comes to withdrawal rates for your portfolio. When you're looking to take a fixed amount out of variable assets, like stocks and bonds, that is not an autopilot decision. That is a decision that is based on cycles and how markets are working. Headwinds, tailwinds, what kind of cycle you're going to be retiring into. Even if you're in a tailwind, and it's best to have a tailwind early in retirement, is analyzing those withdrawals at least on an every 3 to 4 year basis. So we always get, Danny, during the pandemic, we got the 4% rule is really the 2.2% rule. Then Dave Ramsey.
Oh, man, this is where...
boy, Dave Ramsey, I'm going to tell you, Dave Ramsey does a lot of great work about people that he must be pulling his hair out. Oh, we have an hair. When it comes to how people are spending. A little bit. Spending today.
My favorite quote from this whole deal was...
What?
So essentially, Dave Ramsey comes out and says there's an 8% withdrawal rate.
Yay, if I'm going to live 5 years.
But he says... He blasts at the people that says, the real rates that you should be taking out are much less. And he said, basically, these are super nerds who live in their mother's basement with a calculator. I mean, that was my favorite quote from this whole deal.
First of all, we don't have basements here. If I had a basement, I would be in the basement with the calculator. So he's right.
Nor do I live with my mother, but I
don't want to live with my mother right now.
Money, right? Yeah.
I didn't want to live with my mother when I was younger. I don't want to live with her now, especially. She's in my closet. That's a long story. So listen, there's a happy medium between 4% and 8%. It's your rate. It's what you need, but it's also dependent upon how those variable assets are performing. So Morningstar comes out and says, we have got our brain trust to create this and say, definitely a 4% withdrawal rate has a 90% success rate over a 30-year time horizon. That's assuming a balanced portfolio of 50% stocks, 50% bonds. The highest starting safe withdrawal percentage since Morningstar began creating this research in 2021. That's a long time ago. 2021, since that long.
Well, Morningstar's been doing that much longer. David Blanchett was there.
But David Blanchett was really great looking at the academic side of reality of how people spend, right? Retirement spending spending more, then leveling it off in the active year spending first, then you level off for quite a period of time, and then as you age and healthcare costs increase, then that cost goes up. But she's saying the key tailwind for retirees is higher interest rates. How long? She's trying to tell us that higher fixed income rates are here to stay.
Well,
but especially with everybody locking up all their money in the short end of the curve.
That's the problem.
Yes.
If everybody's locking up in the short end of the curve, the problem will be is that it's not sustainable.
It's
now,
not.
If you go longer and you say, hey, I need 4.
And I'm buying a bond. And I'm buying a bond that's 4.
Correct. An individual bond.
Right.
Then yes, I think that's fine. And yes, that we are in a much better environment. You've got the wind at your back. That's great. But the problem will be is that you're going to face that reinvestment risk. And Janet Yellen, they issued Treasury debt. What did they do? They issued short. Why? Because she believes she's going to refinance this debt at a cheaper price in the future.
Although whatever Janet Yellen's doing, it's scaring me.
I know. I actually said that to somebody yesterday. I was like, this makes perfect sense. But then I thought, oh my gosh. Wait, Janet Yellen. Danny, no, we need to do the opposite of what she's doing.
Come into my fray, Danny. Come into me. Come over here. Walk into the Janet Yellen light, Danny.
But I get what Dave Ramsey's saying too, though, Rich, because look.
Plus, he thinks everything is going to earn 12%.
Well, he's always said that. The problem is he doesn't understand the difference between arithmetic and geometric returns and how that actually works and how money works. If you look at a fun fact sheet, that's way different than what your money does. We've talked about this a lot with the rule of 72 and how, fixed rate of return is required to get that to double your money. We're not dealing with that. We're not talking about the math of loss. That's the problem I think that Dave is missing. And I also think, in his defense, some of these guys with the calculators in their mother's basement are maybe a little disconnected from the average consumer and what they're actually doing. They're not real life planners. They're really good researchers. They're great with the numbers, but how money works and what people do with it.
Yeah, maybe he meant it that way. I guess you could think of it that way. And again, I think Dave Ramsey, one thing about Dave Ramsey I'll give him, he's steady with the message, no matter how he gets berated by financial advisors.
He is fantastic for people who need to get out of debt. But at some point, and I think a lot of our clients have graduated from the Dave Ramsey kind of university, And now you can look at things that he may not like. And you can do things a little bit differently. From an investment perspective,
but
I
you
have a
can't
real hard time.
I agree. But you cannot say the 4% withdrawal rate is back. You can say it's back for now. Because things change. Variable assets are variable. If you're telling me that I'm going to have a guaranteed income stream that's going to take care of most of the expenses that I need to keep a roof over my head, I'm okay with that. But I believe since 2019, and look at the S&P over the last 2 years, I'm usually off a
little bit buying bonds and CDs. And, we've talked about adding to the long end of the curve for a while.
Yeah.
And trying to say, hey, let's think about this in a couple of different ways. And he's finally like, hey, I think we need to do it. Like yesterday.
Listen,
I'm like, yeah, 2 weeks ago would have been great.
Agree. I think the smarter investors, the more astute investors definitely are thinking along those lines.
But I think you still need, and here's the problem with this. It's like, number one, what if you're wrong? Number two, when equities start returning and the markets participate as a whole, how are you going to feel when you're stuck at 4.5%, 5%?
And Michael Kitches talks about this, and I'm a big fan of Michael. He's a great planner. This is what we worry about. Sequence of return risk. That's why I adjusted returns lower going forward in our financial planning software. A bear market after the day you retire is not that bad. It turns out there's no impact on retirement, but a sequence of returns of zero or sluggish returns over a period of time, a bad decade, as Michael talks about, that's what I'm worried about. Right now, for retirees, anybody who's retired in 2019 on from now, that's what I've been concerned about.
Well, it's not necessarily that bad decade altogether. It doesn't mean that every year is negative. What it
doesn't
means
matter.
Is
right.
You have a very bad year or a couple subpar years put together. We may be going through that now. And you're taking distributions. And if you're taking 8%, it is going to be very difficult to keep, your principal or to get back to even at that.
And Michael's one of these guys who's in the basement with the calculator, and I'm grateful for that. But he talks about 65-year-old retiree planning for 30 years of retirement facing 3% annual inflation. $1 million, 60% stocks, 40% bonds would be rebalanced, assuming stock returns of 10%, bond returns of 5%, average portfolio return of 8%. Yeah, if I'm using these linear projections, he says, then yeah, take out whatever amount take out 6.6%, take 4%, you're going to be fine. But you have to keep in mind, and we're going to talk about this on the other side of the break, sequence of return risk is frustrating for an accumulator. It could be devastating for a retiree, especially as life expectancies increase. Although over the last couple of years, that's iffy. But longer term, we are seeing a higher quality of life for longer. When we get back, we're going to continue on this topic.
Step into the confusion. Can't you hear the sound that's in the air? It's rock and roll. 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 It's rock and roll.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So, if you were going to have sequence of return risk, and I do think sequence of return risk is fairly high right now, guaranteed income becomes much more of an important part of your equation. If you're balancing scales during sequence of return risk, I want more guaranteed income while my variable assets sort of trail behind, especially for fixed expenses. Not discretionary expenses. One of my old professor mentors would say that's retirement nirvana is when you have all your guaranteed income is covering, whether it's Social Security, annuities, whatever it is, everything you need to survive every day. And you don't have to worry about it. David Blanchett came up with a great study that said that people who have guaranteed income, checks coming in every month, will spend more than those on variable assets. And that makes sense. Because the 4% that I'm taking today might be the 2% of tomorrow. So I got to bank some of that money to overcome the hurdles of the variability. When returns are bad in the first half of retirement, the safe withdrawal rate is not safe for all of retirement. In other words, when you first retire, you want this incredible tailwind of returns. That tailwind, that wind in your sails actually will carry for 30 years. If you have poor returns at early in retirement, you have to manage you have no wind in your sails in the beginning. You could have wind in the sails in 10 years. It doesn't matter. The first
because you depleted your capital so much.
Correct. So you have to realize that the reality. So when we do plans, Danny, we talk about the reality of the numbers, right? The reality of the numbers are the numbers, valuations are the valuations, the guy in the basement with the calculator, math is math. If you're going to have great sequence of return risk, and we did these, and we've changed these numbers to account for it in 2019. If this is going to be the case, we have to manage your distributions as such. You may not like it. You may not want to hear it. But as fiduciaries, we must tell you what our opinion is. Stocks aren't a panacea. They aren't going to get you out. They aren't going to make up for mistakes during headwinds. And if I'm in headwinds my first 5 years of retirement, then I've got a headwind for the next 25 years. No matter what tailwinds come later, because to Danny's point, I've depleted capital. that's why it's important that to understand that you will have a personal withdrawal rate that needs to be examined every few years, right, Danny? You have to make smart decisions with Social Security, pensions, and understand the value of an annuity bucket. Not everybody needs an annuity bucket, but some people do to carry them forward.
Well, I think the annuity, the fixed income, there's so many ways that you can recreate that paycheck. And you mentioned it earlier. I mean, it certainly feels good when you say, okay, I know what my needs are. Here's how I'm going to meet them. Social Security, pension if you have one, right? I mean, I know those are basically extinct, but there are still some out there. You look at any other sources of income that you may have. And then you start backing in and saying, okay, what else can I do to recreate the paycheck, to live the life I need, to keep that roof over your head, take care of your necessities.
Correct.
And then from there, you start to have a little bit more freedom where you can invest in the equities. You can have maybe an account that's a little bit more speculative. You can do things that give you more growth to keep up with inflation, to really make sure that you're seeing growth over the years. But like you mentioned, that sequence of return risk is so real those first 2 years. I mean, so how many studies show the first 2 years are so impactful?
Absolutely.
And then that first 10. Mm-hmm. And if you get in a bind, you may not get back to where you were. You may not see the growth that you expected. That can be problematic for some people.
And Michael talks about this. This is what we do here. We do a dynamic strategy. Yeah, you say you start off at a good sequence of returns, right? You start at a baseline safe rate. You can continue that. Then you get a good sequence. And guess what? You give yourself a raise. Or you put guardrails in. He calls them bumper lanes at bowling alleys. If the portfolio's growing and you hit the bumpers, you get more, right? If your portfolio drops relative to the spending and you hit an upper bumper, you adjust downward. So you can't just say blindly in a variable asset portfolio, I'm going to just take 4% in la-la land every year. It doesn't work that way. If I were a retiree, Danny, I would find that stressful. I'm taking 4%. Now I got to take 2%. Like, I would want a guaranteed income stream that buffers me, or Warren Buffets me against this, right? I would want this kind of buffer to take care of my expenses. Listen, when I first started in the business, we would tell clients, take your Social Security early and invest it, because I believed there was going to be this great tailwind to returns. In 2003, and I lost clients for doing this, I told clients, don't take your Social Security, wait. Start pulling money out of your IRA first. And I got looked at like I had 4 heads. Well, that's crazy talk. You have to adjust, right? Mm-hmm. Because variable assets are hills and valleys, and you have to adjust. And you could have, every 100 years, markets always go up. You're not going to live 100 years. What if I get 10 years of sequence of returns? And
I love when somebody pulls out the history of the stock market. You're like, look at this graph. It's like, yeah, but look at the time. You may have 20, 30, 40 years that you're distributing assets.
If you go into that, right? Like we always say, those are vampire charts.
Yeah.
Like Count Dracula gets those kinds of returns because he can hold the stock for 100 years.
You can't. And that index can take stocks in and out.
Right.
Which is a big difference.
So just be open-minded to crafting what your personal withdrawal rate happens to be. Part of your personal withdrawal rate is working longer or working another job. I just have a client that just took another job, a part-time job. They don't really need the part-time job, but it does affect the withdrawal rate of the portfolio, especially at times when things are rough. Because listen, if you have a diversified portfolio, you're not feeling good this year. You're feeling like crap. All right? You don't have your money in 7 stocks. There's no advisor with a sane mind that's going to put all your money in one sector in 7 companies. It's not going to happen. You think you're going to find that, but you're not. And if you do have that, when those 7 stocks do not perform, then that person's got to find the next 7. Good luck, right? You're going to have consumer staple stocks. You're going to have utilities. You're going to have healthcare. It's just part of the program. And that's the way it should be. You're going to have stocks that pay dividends. And frankly, dividend stocks were the worst performers. And I want companies with robust cash flows and lower debt and growing earnings. But we get all wrapped up in the narrative. That narrative about Ozempic, because Americans aren't going to snack, that kiboshed consumer staple stocks. You're telling me Americans aren't going to snack anymore and the market believes it? Come
First
on.
of all, I'm not taking any of that crap.
I have someone who's taking that right now and they're nauseous all day.
Well, that's why they're
wo-
losing weight.
Yeah, but why do I want to? And one woman just died because it slows down your total digestive system. She lost 36 pounds, but now she's really lost a lot of weight because she's not here. These narratives, and Lance talks about this a lot, that grip markets, if you're going to invest in these narratives, then you're just this is the most tribal kind of investing I've ever seen. I understand psychology and emotions and all that, but this is crazy. To tell me that Americans are not going to snack anymore is cuckoo crazy. Right, Brent?
Absolutely.
And then you got to look at the companies. There are some companies that are still going to be, that provide healthy snacks. Again, you had Mondelez took it on the chin because you're telling me that no one's going to eat Oreos anymore. Come on. That is dumb. And then Mondelez comes out and their earnings are great and now they've recovered everything they lost. If you would have reacted to this dumb narrative that people that take a drug that's going to make them queasy and nauseous all day is how they're going to live their lives.
I love it how, though, they pinpoint a specific snack.
Oh, yeah, no. Well, actually, it did blanket a lot, but yeah, it's...
But what if it had the opposite effect? What if everybody said, you know what, I'm taking this, I'll eat whatever I want? Nobody's thought of that.
Yeah,
we don't need that. I don't need to eat healthy. I can go eat this stuff because I'm not worried about...
But the problem is, I think the drug makes you nauseous.
But how many people are actually worried about health other than worried about
weight? Oh, yeah. Yeah, forget it.
Big difference.
I'm going back to my basement with my
your calculator.
Yep. And my phone for the Butterball Turkey Hotline. If you want to call with the question, that's good. Is dark or white meat better for the planet?
Can you find a way to record this? Because I want to hear their reaction.
I will try to record.
No, I'm serious. I really want you to record it.
I can record these. But then you got to tell them you're recording. I don't know. It feels weird.
No, you're in Texas, right? What's the law?
Oh, I don't know.
I don't know. Maybe we need to look that up.
I hope you all have a great Thanksgiving. We won't see you, or we won't be talking to you. And we're blank this morning on screen here for YouTube. But Lance is back on Monday. Have a great weekend, everybody.